Hi, and welcome to this morning's early global view. It is currently 6:45 a.m. U.S. Central Time on Thursday, April 7th. And of course, this is following up on the various movement we got in the wake of the U.S. FOMC minutes release yesterday afternoon at 1 p.m. Central Time in the U.S., and that was quite interesting insofar as the market almost seemed to anticipate Janet Yellen's dovishness before that was even released, and it turned out to be quite an influence, as we suspected it might, to help underpin the equities. So we have to ask, what has all this meant to the markets? Well, as we said yesterday, where the market had gotten beat up on Tuesday down into another test of the 2035 area late Tuesday, had neared it from early in the session, not quite gotten there, and got beat up late in the day. And whereas the bigger lower support is down in the 2020 to 2010 range, we thought the market might be under some pressure from the anticipation of what were indeed more hawkish views by the other FOMC members. But instead it held right in against the 2035 area that has a tolerance to about 2032, and started to push up in the morning even before we're anywhere near those minutes release, and got back above this channel down break at the 2044 area. And once it was above that, it held in, and once the minutes were actually released, it fed on itself further, getting further above 2050, right up to the 2060 area again by the close. However, this morning, it's off 12 at 2048. So we can see how this market's been ping-ponging around between roughly 2060 to a bit better, where the bigger higher support is up at 2075 to 85, and dropping back down to no worse than roughly 2035 on the corrections, even on the sharply lower opening after the concerns about the U.S. employment report last Friday. So that's pretty much it. Those are the areas to watch. 2060, there's kind of an interim level now that's been overrun both ways at 2050, and 2035, 2020 to 2010, and this market keeps getting nervous, we believe, in the 2060, as we've noted, because the 2075 to 85 resistance is much greater on the intermediate term charts that we'll be looking at in a moment. And that pretty much does it for the short-term view of the S&P 500.